Whether you and your partner retire in your 50s or your 60s probably won't be decided by how much you actually save. It's going to be decided by whether you understand weeks like this. If y'all don't know, 2 weeks ago, Micron, aka MU, lost over $138 billion in a single session. And last Thursday, the Dow jumped almost 600 points to a new record, while chip companies has kept falling, like Nvidia. And yesterday, the Dow closed above 53,000 for the first time ever, and the same chips everyone left for dead snap right back. This is all in the same market. This is exactly what we called a rotation. And by the end of this episode, you'll be able to read one on a chart. Y'all know the vibe, man. It's your boy WAUGH, co-creator of Think and Jam Wealth. And today we're going to walk through what happened, why everything happened, what caused the snapback to the upside yesterday that nobody saw coming, and how to read a rotation yourself, and what to watch tomorrow at 2 p.m. because the Fed is about to show its hand. It's going to be crazy. Without further ado, y'all, let's get straight into it. I'm going to share my screen real quick. Boom. All right. So let's start with last Thursday. All right. July 2nd, one day, it was two completely different stories on the same type of screens. We got Act 2 and Act 3, right? So last Thursday, we saw the Dow jump over 594 points up to $52,900, right? And the same day, the S&P literally went nowhere. As y'all can see, the S&P was flat, sitting at $7,483. All right. Now the NASDAQ, which holds all the technology companies, this dropped 25,833. All right. It pulled back almost a percentage point. But the big one we saw it pull back on was the chip index, SMH. That's the ticker symbol. It pulled back 4.5%. All right. This is an index that tracks all the chip companies, NVIDIA's, AMD's, etc. Right? Now, a lot was going on. But here, this all happened in the same day, is what the crazy part is. All right. So that's no contradicting at all. That's just money moving and the market being the market. But the craziest part is Thursday. That wasn't even the start of it. The opening shot up on June 23rd with Micron down almost 13%. All right, that's wild crazy in a day. Micron down 13%. That alone is about $138 billion in market value gone in one session. All right. Then we brought another wave on Thursday. We had another company named Teradyne drop 13.6%. KLA dropped 11%. SanDisk, another big memory company, dropped 10%. All these companies was dropping, including Tesla. Tesla was actually dropping 7%, even though they had a strong delivery on earnings. So that's not people seeing the thesis break and selling. That's just people kind of being emotional and not having the results they wanted and causing a sell-off right there. So that's a setup everyone was talking about yesterday. It was doom posting all week, all memories dead, this, that, and the third. But here's what actually happened, right? Boom. We had the Dow closing at 53,000 as of yesterday. Okay? Monday. Boom. NASDAQ up 26,000. We was just at 25 while we had 26,000 on the NASDAQ, right? That was a record for the Dow, by the way. S&P up, goddamn high, hold on. S&P up nearly 0.75%. The NASDAQ ran up over 1%. It was up almost goddamn, I don't even know, almost 2% yesterday. A lot of things was moving, and this is exactly what you call a snapback to the upside for the stock market. All right. The chip companies that everybody was rationing on, aka Broadcom, up 4.8%. All right. Micron, everyone thought memory was dead. Memory was up 3% yesterday. And Micron, remember, makes up about half of goddamn the DRAM ETF, which is a memory stock that holds all the memory companies in one. All right. So the driver behind all of this was real data, not people just feeling away. All right. Foxconn, the company that assembles NVIDIA's hardware, posted a really strong earnings report. And that was driven by all the AI demand that's given out by all these companies, either it's the hyperscalers, individual people, etc. And this morning, as I'm recording at 7 a.m., Samsung confirmed they hit a record $89 trillion won in operating profit. So that's about $58 billion roughly 19 times what they made yet a year ago. So the AI thing is real, y'all. And again, I've been saying this every damn episode, but it's real and the company's earnings are showing it. I don't think we see a correction like people are expecting with these type of earnings coming out, especially with Samsung. All right. This is the third straight record quarter Samsung has had, all on AI and all on memory demand. All right. But here's the thing that you got to sit with, right? Even on that record that Samsung just had, literally a few minutes ago, the Samsung stock fell more than 6% today. Record earnings, red day, even though they're having a green year. That doesn't make any damn sense. All right. And that's the whole episode in the stock market in one stock. All right. Money never really leaves the market. It just moves seats. You feel me? So our job ain't to predict where the next seat's at. It's to own the entire row and be like, you know what? No matter where the stock market sits, I'm still making bread. You feel me? Because it's emotions. How Samsung sell off and they just had record earnings. It's made they said trillion. It isn't billion. Trillion. Record $89 trillion won in operating profit. All right, that's crazy, y'all. So that's the goal. Own the road or own the seat. All right. But what caused all this, right? Why did the money move in the first place? There's really four catalysts that all hit at the same in the past 2 weeks. All right. Number one, supply talk. There's reports coming out that a company called SK Hynix, which is based also in South Korea, is slowing its high bandwidth memory expansion. All right. HBM memory is essentially the fuel line of the whole AI memory trade. So anything you hear wobbling or anytime you hear something slowing down or demand not good, woo, 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 it's going to hit every chip name and every memory name hard because there's a bottleneck that the people are focusing on to make bread off of with this AI trade, which is memory. There's not enough memory. People are going to love that trade until a lot of supply comes in and it messes some things up, right? Two, AI return on investment debate. Everybody's talking about it all the time. Same question as 2 weeks ago, right? Does $725 billion of AI capex, meaning AI investment, actually pay back fast enough? Nobody knows that yet. All right. That's going to be at least an 18-month thing to figure out with these earnings, right? But when conviction wavers in that sector, people are concerned about if all this bread that we're paying is actually going to pay back in the future. There's going to be some sell-offs. People are going to take profit. Again, these companies were running. As y'all can see down here, SanDisk was up 750% year to date. Micron is up 241% in Q2. Intel is up 216% in Q2. Marvell is up 200% in Q2. The semiconductor ETF, SMH, is up 71% in Q2. People are sitting on bread. They don't really need much of a reason to sell. They're looking for any reason. And that's what happens when you'll have days like on Friday and Thursday when people will sell off because of that. All right. Number three, the Feds. All right. Kevin Ward's first meeting gave us a pause with a hard line on inflation. All right. He's not doing no more forecasts, no dot plot, no forward guidance, nothing. All right. And the markets hate when they can't read what the Fed is going to do. But Kevin Ward's made that blatantly clear. He's not jacking that. All right. Last but not least, the jobs report. All right. Jobs report last week was wild crazy. It came out to us adding 57,000 jobs compared to 110,000 expected. Unemployment ticked to 4.2%, so it stayed relatively flat. And a lot of that wasn't even like unemployment getting better. It was less people participating by looking for jobs. So there was less of a control group, all right? So that doesn't look too good. And that one print flipped the conversation on will they hike to when do they cut, which is good for AI companies in the stock market because lower rates means more business capital to invest, etc. But there's a lot of uncertainty still there, and the market hates uncertainty. All right. Now, those four next to this context, right? The chip index, SMH, just finished a record quarter, up 71%. Like I said, SanDisk, 750, Micron, 240. Like, these companies is sitting on bread, bro. So people are waiting on any opportunity to sell, y'all. So this ain't nothing to panic about. It's a healthy market. Now, calm your ass down. We'll be all right. You feel what I'm trying to say? So how do we read this for the future, D-Wall? How do we read a sector rotation when we see it? How do we know when the next one's coming up, right? Now, this is the part you can actually use, you feel me? Because you don't need to be able to predict any of this, but you need to be able to see what's going on. You feel me? Anytime we're doing technical analysis and anything with charts, it's not about predicting. It's about seeing, making a estimated guess for real. We can't predict anything in the market. The market could do whatever the hell it wants. All right. So here's 3 charts that can move your retirement up 10 years. All right. This chart literacy. Let's talk about it. Boom. Let me share my screen. Boom. For number 1, we got RSI, relative strength, right? So relative strength is a relatively strong indicator to see if a sector is rotating because it tells us what the volume is behind a stock. All right. So this indicator right here is relative strength, right? And what this line is, a squiggly line, is pretty much telling us when a stock is overbought, which is up here, and oversold, which is down here. All right. Now, the reason we like relative strength is because it tells us what what can we expect from a future when it comes to who's in a stock. All right. So when we see it getting into the red or it tricking up like this up into the red, it tells us, damn, this stock might be overbought. Now people may be looking for any reason to sell, right? But let's say we get down here, like we saw down here back in March, it may be the exact opposite. People may like, damn, this company is a little beat up. Companies pulling back to a point where it's considered oversold. This may be the opportunity for companies or algorithms to buy into the stock. And that's exactly what happened here with SMH. Now, the reason we want to look at RSI is because we want to look for these little curl ups. You see this right here? This is a little curl up right here. So this could be an indicator that, hey, on top of other things like SMH being as 200-day moving average, if we go to the weekly chart, it's still in an uptrend. Like stacking these indicators on top of it and seeing this little curl up in RSI could be an indicator that there could be something pulling up and that a rotation could be coming. Because remember, we want to look at the big ETFs for this specifically, like the SMHs, the QQQs, the XLFs for like energy and all that. You feel what I'm saying? You want to look at those type of stocks, right? So that's one way to look at it. Again, technical analysis is an assumption. We can't ever predict with it, right? But it can give us a framework of what to expect and what to look for. You feel what I'm saying? Now, that's really what RSI, right? I think relative strength is a pretty good indicator, but you have to layer it on top of it. You can't just use it and think that's fine, right? Next thing I think we could look at is companies that have a new 52-week high. All right. So Finviz is essentially a tool that has the heat map. This whole thing right here is called a heat map. It pretty much holds all the companies in the stock market and it gives us an overall look of how every stock is performing, right? I like to use this specifically with the option of drawdown from 52-week high so I can see where the rotation is heading and also what are the companies that are beat up that don't make sense. I see a Microsoft down 30%. That's a good opportunity. Nvidia being down almost 20%. That's a good opportunity. Micron, if you're interested within the memory trade, that could be a good opportunity. Broadcom, even Meta down 24% in a bear market. That could be a good opportunity. This is where you want to see to be like, okay, what's the ones that's super beat up? And what's the ones that's chilling? That's probably in the green, right? As you can see with Apple, consumer electronics, they're doing pretty well. That could be a rotation right there. As you can see with the banks are doing pretty well. That could be rotation right there at the end of safety. As we can see, internet retail's taking a beat up. Amazon's beat up a little bit. Baba's down almost 50%. So using this to really look over the entire market to see where people are positioning themselves as far as their long-term positions, this is a really good place to look to see where the opportunities are. Oracle down 58%, wild crazy. Palantir down 36%, wild crazy. So this tells me, hey, the rotation is not in software. People not looking for software. But where are they looking? Are they looking into healthcare? Are they looking into the bank section like I brought up, the credit markets? Where are they looking into? Finviz heat map allows you to really do that. and have an overall look quickly. You don't got to go deep diving and doing a bunch of research, which you should. But if you want to look something quick and efficient to give you a foundation of where to look and where to study, I think the Finviz heat map is really good for that. All right. Last but not least, we have volume, right? Volume is mad important because just like RSI, it kind of tells us, whoops, Jesus, it tells us who also agrees with what we're seeing. All right. So, prime example right here, right? This candlestick right here, this red candlestick, this is volume. These bars are volume, right? So, the bigger the bar, the more volume, meaning the more people bought or sold right here. So, we saw mad people sold right here with SMH, right? That pretty much means that a lot of people aren't feeling SMH at that point. A lot of people are seeing what we may have saw. Maybe somebody saw that, oh, it dipped below the 21-day moving average here. So now I want to sell it because it fell and it lost support, which could be a reason people sell for, right? But the reason we want to look at that and see what other people are telling us is because it allows us to then see what other people aren't seeing. So someone could say, damn, it lost support. Let me sell here. Well, I could be looking at it like, hey, wow, it got down to its 50-day moving average and I had a strong sell volume here. Okay, let me look for opportunity if I see strong buy volume here. Because strong buy volume here could mean that this is a support line that SMH could bounce from and give me some gains on. All right. So that's why you want to look at volume. It allows you to play the player. For me, but also it allows you to don't play yourself because if you win a trade, and let's say you got an SMH out of here, and you ran this up and you stayed in there, you didn't take profit here, but you got back down to here, you'd probably want to have a stop loss somewhere around here. You see what I'm saying? That it allows you to not play yourself, especially with this type of volume of selling. You feel me? So that's all the things that could really help you and your peoples make sure you retire early or effectively on time, but not really knowing everything and predicting everything, but knowing when and where you could play the player by using these three specific tools. All right. Now, how's this land for your money, right? How does this all come together for you? How does this help you? How does this you help allow you to take care of you or yours, right? First thing first, you don't chase, bro. You don't chase. You seek the money just where you left it. You don't guess what the next one is. I feel me. You pick your favorite company, you pick your favorite ETF, and you stick with it and you own it. All right. You own a basket. Either it's broad, diversified, you automate the buys. Either it's the SMH, either it's the SPY, either it's the VTI, all these big indexes or ETFs that hold majority amount of strong companies, specifically VOO that holds the top 500 companies in the world, then every rotation that you see happening after that is inside your portfolio. So you don't gotta stress. You don't gotta worry about if tech is going to consumer discretions or the financial markets. You don't gotta worry about that. You already own everything. You feel me? So you just reaping the benefits, buying the dip. That's it. You feel me? Because you're already sitting where the money rotates. Remember, y'all, this is chart literacy. This is not predictions. So, what we got coming up this week, man? We got FOMC minutes, right? So, what's going on FOMC minutes? FOMC minutes is essentially a report that's going to come out tomorrow at 2 p.m. And it's going to be the Feds releasing exactly what everyone's thoughts were during the last FOMC meeting. For me, for y'all that don't know, FOMC is pretty much the day that all the Feds decide what to do with interest rates. Do you raise them, keep them the same, or do you lower them? All right. And with no forward guidance, meaning no prediction of what the Feds are going to do from now moving forward, the Kevin Walsh now dragging that, these minutes are going to be the only thing we have to be like, hey, what's going on with the Feds? What are they leaning towards as far as rate cuts, rate hike, etc. You feel me? So that's going to be super, super important today. All right. Now, we'll react to that tomorrow. I got a dashboard ready for y'all here. You feel me? And we're going to go over this tomorrow exactly to see what their thoughts were. And I'm going to drop that video for y'all, of course. But also remember the rest of the week, we got jobless claims coming now as well. Jobless claims, we're expecting about 215 jobless claims, which is historically low. And then also Friday, Delta opens earnings season right before the bell. It calls in at 10 a.m. That's going to be really important look on how the consumer is doing. because if people are not taking as many flights, that could tell us exactly that the consumer maybe try to save more money, not trying to do too much because they're not confident in the economy. You feel me? Now, while the Fed, that's going to be the bigger piece, most likely are going to hold for a lot of the year. Remember what is held with it. And that's credit card APRs, that's personal loan interest rates, and that's auto loan interest rates. All right. The average right now is sitting at about 21%. And the rate path is your debt cost. You know what I'm saying? A lot of people are sitting on a lot of debt, and these interest rates are killing them. So this is why we need to make sure we read these documents, y'all. Fed minutes, everything like that. That's why y'all got people like me and Wolf to make sure we give y'all the information in a simple way to understand. You feel me? That's really all I got for y'all, bro. Y'all let me know if you got any questions, concerns. Let me know in the comments below. I'm gonna see y'all Wednesday. It's D War. I'm out of here.